Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar bounced back and away from the key level of 66.50.55, which is also in line with the 60-day moving average. From the rebound, the market is now looking back towards the top side of its range, which is expected to hold around 68 cents, while the US dollar, which measures the greenback strength against a basket of 6 major currencies, fell from 101.60 to 101.28 overnight. This follows a stronger than expected PPI, or the Producer Price Index, data release that increased expectations for the US Federal Reserve to cut rates next week on 17/18 when they meet. Although a 25 basis point rate is expected, some are speculating a 50 basis point reduction could still be on the cards. The Bureau of Labor Statistics in the US reported that the PPI for the final demand rose by 0.2% in August, surpassing the forecast of 0.1%. Core PPI, excluding food and energy, increased by 0.3%, exceeding the anticipated 0.2%. In a separate report, initial jobless claims reached 230,000 for the week ending in September 7, which was on forecast. Overall, the inflation figures are the final key data ahead of the Federal Reserve meeting next week. Any pullback for the Australian dollar, the market is likely to still find support around 66.50.55, with minor support seen at 66.90. The euro surges away from the key support level of 110.20.30 and now appearing to be back on track and looking towards the level of 111.35.45 and on towards 112 figure 15. If the weakness in the dollar continues, then the downside target holds to 99.5 and therefore should support the market eventually reaching its 112 target. Any pullback should find support around that 110.20.30 level as previously seen, with the inverted hammer does support further gains. Turning to dollar yen, well, it would seem that Dragonfly Doji amounted to little as the bears have come back and now focusing back on that key level of 141.60. Now a close under there in New York would give further implications to the downside and open the way towards 136 to 138 or even lower in the broader sense to 130. Any rebound still likely to be capped around 143 figure 15. The sterling also surged and away from the support area that was seen around 129.70.80. If the market remains on track and keeping an eye on these technicals, could see further indications to the upside towards 131.5 to 132.25.35. However, right across the board, due to the anticipated volatility, traders should reassess and adjust risk management strategies and keep an eye on technical levels as volatility still remains high. It was big cheers for gold as the market surges, breaking above the key area of 2,556 to 58 and now opens way towards the region of 2,600, the broader target. In light of the Marubozu candle and also how strong the technicals are, looking at the RSI and the MACD following behind, and a bullish trend from the ADX does support the upside case, with any pullback likely to be shallow and support seen around 2,536 to 38. Oil also extends its rally. As we can see now, the market is pushing on towards the region of $69 a barrel. I like the way the market is shaping up, like spot gold, and therefore could see a further gain on towards $71 a barrel, with any pullback likely to be shallow and support seen around 67.80 to 95. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new weekend.